Well, I guess that's it. I guess that's it. I guess that's the whole cycle. I guess Bitcoin's done for the next 4 years. You know, I see you all in 4 years at the next all-time high, I guess, when we finally make it above 109K. Yeah. No, I'm just kidding. I don't think the cycle's over. Either we're going higher. But in today's video, I want to talk about why are we crashing? Because obviously we are crashing. We're below 80 grand today for Bitcoin. A lot of people are panicked. Sentiment is dead. You're probably watching a lot of videos, reading a lot of posts and a lot of blogs of why it's happening, blah, 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 for people trying to have a crystal ball to read the market. I don't have a crystal ball. I've got no clue. I'm a dude in the middle of a cornfield right now, talking into the wind. But nonetheless, let's talk about macroeconomics and what is actually happening. This chart on the screen here is, in my opinion, the big case as to why there could be lower downside, not only for Bitcoin, but for the entire stock market here in coming weeks and months, maybe even quarters, right? Is a recession coming? I think this chart can prove that the probability of that is the highest it has been in years. What you're looking at here are the interest rates of the Federal Reserve since the 80s. This is a very long-term chart, and it's critical to understand this chart. Why does the United States government want to have interest rates lower? Is for two main reasons. The tangible reason, the intangible reason. The direct tangible reason is that we need lower interest rates to be able to serve the debt of the United States, right? And then the less obvious answer is that not only do we want it cheaper to fund and roll over the debt of the United States, we also need lower interest rates because the most effective way to pump up prices of the housing market, the most effective way to pump up prices of the stock market and stock valuations is lower interest rates, right? If you take a field like the one I'm at right now and you build a house in it, right, the easiest way to be able to sell that property for a higher premium, or at least be able to evaluate higher, is by having a lower interest rate on the mortgage, right? Sure, maybe you could try to force the underlying value of the property up higher, but it's just a heck of a lot easier to lower those interest rates, right? It's fully within the interest of the Federal Reserve of the United States government to lower interest rates as much as possible. There's a time where they want to higher it to stoke demand for the dollar, which is why if you look at this chart here, you'll see that interest rates have gone up a good bit in 2023 and 2024, as you almost certainly already know. But what are the gray lines here? The gray lines here are the predictions of what the Federal Reserve was going to do next, right? So if you look at the blue line, that is what actually happened. If you look at the gray lines, those were the predictions. And the red line is the average or the median of those predictions, right? And so what you can see here is that in the 1980s, 1990s, 2000s, even in the 2010s, what we see is consistently the market is betting, the market is voting, the market believes the Federal Reserve is going to be more, quote unquote, hawkish, meaning they're going to raise interest rates more. The market consistently has believed that. The one time where they were wrong on the opposite end of the spectrum was in 2023. The market did not expect the Federal Reserve to raise rates nearly as harshly as they did. And so why am I bringing this up? The point is that right now, the market, the average of the market, thinks that the Federal Reserve is getting close to lowering rates. And that is totally possible. Maybe we are close to lowering rates. However, I think it's also a very strong possibility the market, looking at the last 40 years of data, the market continues to be wrong, and actually we're lowering rates even more. Now, this is good long term for risk assets, and Bitcoin is considered a risk asset in the mainstream world, so that's good for Bitcoin price in the long term. However, the reason why I'm saying this chart could potentially signal more downside for Bitcoin and the general stock market is that in order for the Federal Reserve to lower interest rates more, just like it's done in all these past examples, it needs to have an emergency to respond to. It needs to have something blow up for the justification and the excuse to print more money. We saw this in Donald Trump's first administration, right? The Fed was having all kinds of problems. There was problems in the back end, of the American economy, right? Similar problems to what we're seeing today, albeit to a much lesser degree. And then all of a sudden, we had the lockdown, we had the virus, right? Obviously, you take some sort of other external situation, turn it into emergency, and boom, all of a sudden you have the excuse to add trillions of dollars to the balance sheet. You have an excuse to lower interest rates basically down to zero. And all of a sudden you have an excuse to do all these emergency measures because there is some sort of panic, some sort of crisis we have to respond to, right? And so my point is, what I think Trump is doing is I think Trump wants to have some sort of crisis in the first part of his administration so that he can blame it on Biden. But more importantly, he can get the low interest rates, which is what he really wants, not only for his personal real estate holdings, but for the sake of the United States government, for the sake of the United States taxpayers, everything else. I think what Trump is going to try to do during his administration is force asset prices up while still doing his best to keep CPI inflation as low as possible, right? Now, what he would argue, if he is actually successful in doing that, is that I'm the best, we kept inflation low, stocks went up, houses went up, right? We kept it low, but inflation was low. You need inflation low, right? That's what I think he's going to say. Right now, of course, for people like you and me that are in Bitcoin and understand that actually everything is an inflation rate, not only a random mixed basket set of goods that the Fed chooses arbitrarily, but everything, including property and stocks in Bitcoin, all of that needs to be included in the inflation rate. The real inflation rate is the printing of dollars, not the rising of a certain basket of goods that an arbitrary group of human beings has chosen. So yes, I think all those things, are a wrong way to look at it, but I think that's the way they're going to look at it. I think it makes a lot of sense that if the Fed is going to cut rates, they're going to do it probably this year. And if they're going to do it dramatically, they need some sort of excuse. They need some sort of crisis. Am I saying that it's all some big conspiracy that they're planning out together? No, I'm not saying that. It's possible, but I'm not saying that. My point is that I think Donald Trump is not opposed to having this kind of chaos. Keep in mind, the general stock market is already down, a significant percentage. Many other major tech stocks are down double-digit percentages, 10, 20, 30, even 50%. Many companies on the stock market are down. So, and considering that, in my opinion, Bitcoin's actually holding up really well. The stock market has given up all of its gains since Trump was elected, and Bitcoin has still not done that. In fact, Bitcoin would have another $10,000 or so, more or less, the low 70s, high 60s, to be able to retrace that entire Donald Trump pump. So in the short term, do I think that prices can continue to go down? Yeah, absolutely. They totally could. Am I betting on it? No. Am I waiting on it? No. Am I shorting Bitcoin? No. Am I still buying? Absolutely. Because the risk reward just simply is not there. Bitcoin is under $80,000 right now. Maybe we have a recession. Maybe Trump continues these tariff shenanigans, right? Maybe my predictions of all this stuff is right. But even if I'm right, okay, maybe the max downside we're going to see is 50K, 60K, 68K, right? It's going to be some sort of, moderate downside. Maybe we're going down $10, $20, $30,000 per Bitcoin if you're extremely bearish, and I don't even think I'm that extremely bearish on the short term. But let's look at the long term. Let's look at something that is a bit more exciting, right? If we're going to be deciding, should we try to time the market and predict what's going to happen here? Let's look at what happened literally this morning. Michael Saylor's come out and he wants another $21 billion worth of orange coin. He announced the $42 billion back in October of 2024. Now he wants another $21 billion for a total of $63 billion in this raise. This is 1% of the Bitcoin supply that he wants to buy up again, assuming Bitcoin stays at current prices. Now, I don't know what's going to happen, but assuming he actually executes these orders with the United States, with other countries, with Texas and other states starting to buy Bitcoin, I just think the probability of Bitcoin going to 100K at this point is still higher than the probability of Bitcoin going down to 70K, right? Or 65K or something like that, right? It's just, there's so much buying pressure. Yes, Saylor is the most infamous or famous form of buying pressure, but the point still stands that yes, Bitcoin could totally continue to fall and follow the stock market just like it did back in the lockdown days of 5 years ago this week in March of 2020. But you also have to keep in mind, we literally had a strategic reserve thrown at us. You got Lutnick and Bissett in charge of that. Maybe we will continue to crash, but it is in the interests of Michael Saylor. It is in the interests of Lutnick and of Trump and of even Elon, dare I say, even though he doesn't comment on Bitcoin, all of them own Bitcoin. All of them want Bitcoin to continue to grow. So that's something to keep in mind. Yes, we could totally have downside with the macro uncertainty and blah, 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 but I'm not trading for that. In the same way, I wouldn't trade because of these kinds of upsides. Yesterday, we didn't know Saylor had another 21 billion buy still planning, right? Saylor already knew that. He was sitting there at the crypto summit for Donald Trump's crypto summit, knowing in the back of his head that he was about to buy, or at least issue, another $21 billion of stock to buy Bitcoin, right? He knew that, we didn't know that, and we never know when those kinds of announcements are going to be announced, right? Lutnick is not going to tell us, oh yeah, we're going to buy, 50,000 coins, right? All of a sudden, right? You have the Czech central bank that are now exploring adding Bitcoin to their balance sheet, billions of dollars of Bitcoin. They're not going to signal that to us, right? And so, yeah, we don't know what Trump's going to try to do and wreck the economy so that the Fed Reserve, lowers the rates, right? We're trying to deal with people here, and that's why you shouldn't trade. Michael Saylor is a person. You can't predict him. Jerome Powell is a person. You can't predict him. Donald Trump is a person. You can't predict him. The human beings at the central banks are people. You can't predict them, right? You can stare at all the freaking charts you want, but there's a very small, a very powerful individuals in the world that, and because Bitcoin is such a small asset class, all it takes is a good number of entrants from that powerful world to make a dramatic change in Bitcoin. That's why you should not try to time it. Now, speaking of the upside and where I think we could be going, so look at this chart here. This is not my chart, but I've shown these kinds of charts before. This is one of my favorites, and it's even more bullish now than the last time I looked at this chart. If you look at this chart, it is Bitcoin following a power law denominated in terms of gold. For me, I like the idea of a power law. I've said that before. I'm not a power law maxi, but I can't deny that it seems to be following that very, very well over the course of the last 15 years. And given the fact that Bitcoin is kind of like a digital city in cyberspace, and power laws are very attached to the growth and development of cities and economies, it makes a lot of sense to me. Network effects, right? But you got to account for the y-axis, which is the US dollar, that's depreciating in an exponential function, right? Exponentials are not sustainable. And so what this chart tries to do is it tries to compensate for that by adding in the market cap of gold. And what you see, if you look at the chart here, is that according to this chart, and again, I'm not saying this chart is gospel, but if according to this chart, the Bitcoin bull market has not even begun. It's not even begun. I know it feels like it's begun, right? I know it feels like it has because, because we're at such a high price. But look at this, right? The blue channel is the power law band for Bitcoin denominated in gold. And what you see is that Bitcoin in orange is in the lower third, the lower fifth of that blue band. We're basically still at the bottom, just like we were in late 2022 when FTX collapsed, right? Now, does that mean that this has to continue to hold? No, absolutely not. It could totally break, maybe for a short period of time, maybe permanently. But if this holds true, if the market cap of gold increases by some non-zero percentage in the course of the next 12 months, and we extend this blue channel out just a mere 1 year out to the year 2026, what you could be looking at the top end of this channel is a $500,000 Bitcoin. Am I saying that I'm betting the farm, literally the farm, on a $500,000 Bitcoin next year? No, absolutely not. For the same reason I wouldn't bet on a potential downside of 10 or 20 grand from here, I wouldn't be betting on a potential upside of 450 grand from here. I just, that's not kind of the risk tolerance I want to take. However, if we're looking at risk reward, it makes a lot of sense to me. Gold is growing and growing, now getting pretty close to $20 trillion consistently of market cap. Pretty soon it's going to be $30 or $40 trillion worth of market cap for gold. And as long as Bitcoin continues to grow to power law, the baseline minimum of what is considered quote unquote cheap in relative terms to gold is just going to keep grinding up and up and up indefinitely. And so, yes, this short-term dip hurts. Yes, most people view it as a negative, but I'm actually really happy. I'm buying Bitcoin cheaper than I was buying it 3 months ago. And I know that probably a year from now, it's going to be doing even better, right? Think about how much has changed in the last year. 1 year ago, or let's go even further, 15 months ago, there was no ETF. Larry Fink wasn't on television promoting Bitcoin. You didn't have the freaking president of the United States talking about Bitcoin. So much has changed just in the last year. Forget the price. Yes, price is up, but just in terms of that kind of movement, right? Not only is Bitcoin price still double from where it was 15 months ago, but those kinds of major narrative catalysts have absolutely changed everything. And I'm not willing to bet, I'm not willing to gamble that I am sure Vladimir Putin isn't in the next 15 months going to say, we're going to dump all U.S. treasuries and we're going to, only accept Bitcoin for our oil, right? Do I think it's going to happen? No. But what's the probability of it happening? It's not 0%. I'll tell you that. So I would not be betting on these things. I would have a long-term time horizon. If you're worried about a recession in the coming weeks or months, I would encourage you to zoom out. It's more probable we're closer to a bottom than we're closer to a top. And ultimately, you shouldn't be caring about Bitcoin denominated in dollars. You should care much more about denominating it in terms of gold. You should care much more about denominating it in terms of a power law in terms of gold. You should care ultimately much more about Bitcoin pricing and the productivity of the future. And I can tell you that we're going to be printing a lot more currency in the future than the present. If you want to think of it this way, 99% of the dollars in existence are in front of us, not behind us. When it comes to Bitcoin, 95% of the Bitcoins in existence are already here. Only 5% of the Bitcoins in existence are yet to be discovered in the future. But the dollar is completely opposite. The dollar has already hyperinflated. It is just not priced in yet. The dollar is already insolvent. It is just not priced in yet. The dollars already exist because there's an infinite amount of cash at the Federal Reserve. All it has to do is hit the market. All it has to do is be turned on. And that's the moment where Bitcoin is not trading around in terms of thousands of dollars or crashing thousands of dollars, but it's spiking up and up and up in terms of tens or hundreds of thousands of dollars. That is the kind of moment that's coming. Probably not this week, probably not next month, probably not even for the next few years, maybe even decade, but give enough time and eventually a low probability becomes almost certain. There's a 1 in 1,000 chance I'm going to be struck by a bolt of lightning here in the middle of the field, but give it enough time, even that smallest probability eventually becomes a certainty. If I stand in that field for 100 years, maybe even 500 years, if I somehow lived that long, I would be struck by a bolt of lightning. And yes, sure, rapid depreciation of the dollar is a low probability, but take that low probability, give it a long period of time, and it's almost certain. Bitcoin is going to keep going up. The probability of downside is way lower than the probability of upside. So that's the main message of the video today. There's something else I want to share with you as we wrap up and I deal with the glare from the sun. If you appreciate this video, please like and subscribe and do all that wonderful stuff. But yeah, so this is Bitcoin priced in gold. You know, again, I mean, I don't want to be one of those moon boys that say, oh, the bull market hasn't even started, blah, blah, blah. I know a lot of people feel like, oh, is the cycle over? Or, oh, you know, blah, blah, blah. But keep in mind, like, we're down close to 30% now in Bitcoin, you know, 25, whatever it is, right? Like, I think that's the best evidence that the 4-year cycle's not dead. You know, like, that's the best evidence. There's volatility still in front of us, right? You should be happy. I'm very happy by seeing this 25, 30% correction or whatever it's going to end up being, right? I'm very happy with that. Right? Because that signals to me, hey, this kind of structure is actually very healthy. If we were at 109 grand like 3 months ago and we suddenly spiked up to 140, I would feel a little bit more skeptical. Like, yeah, man, that feels really overextended. But the fact that we've come back down and we're still holding this high 3 months above 80 grand, like, that's a big deal. Bitcoin couldn't even survive a month and a half over 60 grand a couple years ago. And now we have a multi-trillion-dollar asset that's keeping up with the liquidity, keeping up with the selling pressure, right? You know, we don't even have the buying pressure of the nation states or of the money printer yet. And so priced in terms of gold, I think there is a potential that this actually is a lot earlier than we think. And there's a potential that we don't have a bear market in the same way we did in the past. You know, I know I was just saying that we just had a 30% correction. And that does, I think, give some credence to the idea that we'll have at least a 50% correction in a bear market. However, it is very interesting to me that we're already approaching a third of the way through, or excuse me, a quarter of the way through of this year in 2025. And it feels like there's a long way to go. It feels like there's a long way for sentiment to go. Sentiment is basically dead. And so we'll see what happens. There's a lot of uncertainty in the future. But what is certain is that you should make the most of every day, because we don't know how much longer we have here on Earth, right? I'm here in this beautiful, brown, desolate field here, but I'm really looking forward to getting back out to warmer climates and being able to hang out with Bitcoiners. If you are a Bitcoiner and you're somebody that wants to make friends in Bitcoin, highly encourage you check out Bitcoin Zion. It's coming up here in May of this year in just a couple months, and this is a really unique, special opportunity. I'm biased for this event because obviously I'm putting it on with a friend of mine, but the goal of this event is to make friends, make connections. You know, some people coming are brand new to Bitcoin and they're looking to learn. Other people that are at this event are Bitcoin OGs that have been around for a long time. They have a lot of knowledge to share. We're going to be doing some Bitcoin talks and educational sessions, but the majority of the time at this event is going to be hiking, making friendships, and those kinds of connections. A lot of people that are singles are coming. There's a handful of couples that are coming, and there's a couple of families that are bringing their kids and young adults as well. So no matter where you are on the Bitcoin education spectrum, and no matter if you're coming with friends, with family, or just on your own, everyone's welcome, and it's going to be a really, really awesome time. Food is covered, your transportation is organized and covered for you, all logistics covered. Basically, take all the hassle away, and we're going to have a really fun time and make some awesome memories, because no matter what happens in the next couple years, whether Bitcoin ends up at 100 grand or 500 grand, and I can't believe it's actually possible, but that's I think, very possible. We're going to look back at these kinds of memories and be really glad that we took these opportunities and seize these moments when we still had the chance to do it. So if you have any interest in making friends in Bitcoin, this is better than a meetup. This is better than a conference. This is the kind of retreat you want to have. I'll be there. There'll be other recognizable Bitcoin faces there that you probably know, and lots of other people that frankly you wouldn't recognize because they like to keep a lower profile, but really underrated people that are still wonderful to learn from. So give the phone number or screen a text if you want to join that event. But even if you don't join that event and you'd rather, stay, isolated wherever you are and in your little Bitcoin island bubble of not having Bitcoiners in real life, that's okay too. All the respect to you. And ultimately, don't freak out. Don't panic. You should be panic buying right now, not panic selling, because the probability of $500,000 of Bitcoin, I think, is just as reasonable as saying we're going to have a $50,000 Bitcoin if your time horizon is 12 to 24 months. I don't think necessarily either of those are going to happen. It's probably going to be somewhere in the middle, but the upside is way higher, if not an order of magnitude higher than the potential downside from here. So we'll see what happens, but I'm going to get back to enjoying the day. Thank you. It's so quiet out here.